Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and today we are talking about the Fed. So they just came out and they said that they are lowering interest rates by 0.5%. So this is absolutely fabulous. This is exactly what we talked about last week. This is what was being anticipated. So those interest rates that we've already seen being built into our interest rates and coming down every single day, we've seen a little bit of improvement over the last couple of weeks. We are not in any kind of concern that interest rates are going to go the opposite direction. So very, very exciting. We're going to talk about that today. I open this up to everybody. If you have questions, you'd like to put your question into the chat, into the feed, I am more than happy to read that out loud, answer it for you, and tell you what I'm interpreting from what I am seeing and what I'm hearing today. But the great news is that we finally got our first rate cut, and I believe that it has been 3 years since they started to raise interest rates and then obviously hold them steady and high for a very long time. So this is absolutely fabulous news. I can see that Abraham has jumped on, says Inland Empire check-in. So Abraham, thank you so much for joining us. And I'm so glad that you are here. Please, again, feel free to put your questions into the feed if you have any. But we are going to talk about the Federal Reserve. They've dropped the interest rate. So who is this going to help? What do we need to do right now? Who would be in a position to be able to take advantage? So this is going to be a very exciting show, not one that we have been able to do in over 3 years. So super exciting. Ashley just jumps on and says, tuning in from Henderson, Nevada, excited to hear about the Fed cut. So Ashley, thank you for joining. And I love that I've got somebody from the Inland Empire, that's California. I love that I've got somebody here from Henderson, from Vegas, from Clark County in Nevada. I want you guys to all know that I can help you in multiple states. So if you guys have questions, you want to get something done, you've got a loan application that you'd like to get started, me and my team, we are licensed in multiple states. So we have pretty much got the majority of the West Coast covered: Washington, California, Nevada, Idaho. We've got all of these states that many of you have all been moving to. So we've got Texas, Illinois, Florida. I have so many, I can't even remember them all right off the top of my head. But if there is a state that you are trying to get something done in, please do not hesitate to ask. I don't know if I said Arizona, but we've got a lot of states and we're here to help. So anyway, so let's get into this. So we've got a 0.5 point rate cut. And so the first thing that's already happened, this was announced about an hour ago. It was 11 a.m. Pacific time, 2 p.m. Eastern time, that they came out and they said, that they were going to drop the Federal Reserve prime rate by 50 basis points, which is 0.5%. So I've already started receiving the emails and the phone calls. Does my interest rate get better? Am I going to see an improvement? Can you lower my interest rate? For clients that we have currently in process. And so I do want to explain once again exactly how these rate cuts work, how the mortgage rates work, so that you can understand we are not going to see an immediate crazy change in interest rates that are going to just be overnight. Interest rates for mortgages are tied to the market. They are tied to mortgage backs, notes, bonds, treasury securities. And so very much like the stock market, based on news that comes out, conferences that are had by the Federal Reserve, that will create stimulation in the market, which will eventually bleed into our interest rates. Most mortgage rates and rate sheets are based on market, right? They're all based on market, but the market is based on investors and it's based on in anticipation. So over the last 2 weeks, we have already been seeing our interest rates improve. For the last 2 weeks, our interest rates have either gotten a slightly better each day or they've held steady. We really haven't had any days where interest rates were starting to go backwards. So for 2 weeks, we have been enjoying improved interest rates and rate sheets because of the anticipation of what was going to happen today. Last week, I told you guys we just had to wait and see. There was no way I could predict the future. Now we can watch what analysts say and what they feel is going to happen, and then we have to read in between the lines to decide what is the best course of action for ourselves personally. So as of last week, we were building in a 0.5 point rate cut that was supposed to happen today, and that's what our rate sheets have been based on. Now, if interest rates would have only been cut by 1/4, then we would have actually seen interest rates go up fairly quickly. We would have probably seen some rate changes today. We would have seen worsening rate sheets. We would have gotten emails saying that our investors were changing rates. Investors would have been, changing their stance and where they've got their money in the market. But that didn't happen. We were building in a 0.5 point and we got the 0.5 point. So the great news is that the awesome interest rates that we see on our rate sheets today truly should hold steady. Now, over time, we are going to start to see the rate cuts start to bleed more and more and more into the rate sheets. So do I expect that we'll see better interest rates in the future? Absolutely. There's already an anticipation based off of the Federal Reserve meeting, the press conference that they held today. There's already an anticipation that we are going to see another rate cut in November. And I did actually look that up, and I believe our next meeting is November the 7th. So last week I told you guys, I'm like, it's in November, I think, end of November, early December. I was sitting here in studio and I didn't have those dates in front of me. So it is actually going to be beginning of November. It's every 6 weeks, so you guys can count it out. It's always on a Wednesday that they make their announcement. So that should be November 7th and 8th is our next meeting. Then the meeting after that will be in December. So we've got 2 more meetings this year. And according to the Federal Reserve press conference today, there is a chance that we're going to see rate cuts at both of those meetings. Now, they've told us before that they were going to do rate cuts and then chose not to. So can we guarantee that we'll have rate cuts? No. Do we know how much that those rate cuts are going to be? No. They could be 1/4, they could be 1/2, they could be 3/4. It's just going to depend on what they say, what they see, what is happening with the economy. So with this 0.5 cut that they just gave us, this 0.5 point cut that we just got today, is inflation going to start going the wrong direction? Is employment going to continue to cool off and continue to get worse? They're going to gauge the rate cuts that they give us based on what they see in the reports that come out between now and then. But what we should start to see, just like what happened this time, couple of weeks before the meeting, it was very, very clear. There was very good evidence that we needed to have a rate cut, and they already started with the anticipation to bring those rates down. So when we get a little bit closer, a couple of weeks out in November to that next meeting, they're going to have a better idea. Are we going to see 1/4? Are we going to see 1/2? Are we going to see 3/4 based on what the market is indicating? So at that point in time, they're going to start the anticipation and we're going to start to see interest rates change. Again, we'll see rate sheets start to move. Same thing's going to happen in December. So one more thing to keep in mind, guys, is that we can't move backwards. They're starting to give us that relief, right? They said we're going to hold rates higher for longer. We're doing this because we need to cool things off. We need to get that inflation down. So they are seeing that we are sustainably moving in the right direction, which means that our interest rates and our economy is starting to cool, right? And so they're giving us some of that back. So, but if if we start to move in the wrong direction, they're going to quickly pull that back. They might leave it where it's at, but not give us another rate cut. They have the opportunity to actually take that half back. So we have to watch things very, very closely. But what was great about today was that we did get the rate cut. The improvements that we've seen in the rate sheets should absolutely hold steady. Hopefully we'll see over the next, course of the next 6 weeks, indicating factors that we could get another rate cut, which means that that's going to bleed into our rate sheet some more. And we're going to see some more hopeful, decreases in those interest rates. But we have many, many clients right now that are able to take advantage of where things are at today. And I have not been able to say that for a very long time. So that is the most exciting part, is that I was able to send out emails today to our previous clients who have FHA loans, VA loans, and even conventional loans to discuss the opportunity of doing a refinance to lower their interest rate, to bring their mortgage payments down, and to help them get some better cash flow on a monthly basis. So this half a point cut is truly going to start to help people to breathe a little bit easier. Not to mention that you will see your credit cards, those interest rates will come down a bit. If you have a home equity line of credit that is in its adjustable phase, you will see that interest rate come down a bit. So those minimum payments will change. Student loan financing should get a little bit better, interest rates being offered. Car loans should get a little bit better, those interest rates being offered. If you've purchased a car over the last year and a half, you very well may be in a position that you could start to look at possibly refinancing that car loan for a lower interest rate. So this is all super, super great news. Very, very exciting. If you have a VA FHA loan, you truly should be reaching out to us. This is the time to be reaching out to see if you could take advantage of a streamlined refinance. So if you can drop your interest rate by at least 0.5% or more, you definitely want to do that. And you are not limited to just one FHA or VA streamline. You can do one every about 6 months. So there are different factors for each different loan program of how often that you can do it. But if you think 6 months, you think 6 mortgage payments, then it opens you up to the ability to be able to do it again. And so that means that you can take advantage now, and then you could take advantage again, and then you could take advantage again. So if we continue to get these rate cuts and we continue to see these interest rates drop further, then we could continue to lower that interest rate for you. Many of you also have quite a good amount of equity in your homes right now. Many of you have taken home equity lines of credit over these last 3 years because that's what made the most amount of sense. But many of you do have a second mortgage or a home equity line that is in the double digits in interest rate percentages. So this would be a very good time to start reaching out to us as well to see if the opportunity does exist to be able to roll all of that into one mortgage loan. So get it all consolidated, get that second paid off, and possibly get that interest rate and that monthly mortgage payment reduced. So lots of opportunity today. Heather did jump on for me. I love that. And she says licensed in California, Arizona, Nevada, Washington, Idaho, Texas, Tennessee, Georgia, Florida, Illinois, North Carolina, and Oregon. Heather, thank you, because when I started the show, there was no way that I could have actually ripped all those off the top of my head. But if you are in one of those states, so California, Arizona, Nevada, Washington, Idaho, Texas, Tennessee, Georgia, Florida, Illinois, North Carolina, and Oregon, we would definitely be able to help you here at Mortgage Mom Radio, and we would love it if you guys would give us a call. So I'm going to throw that number out for you. I don't do a whole lot of self-promotion throughout all of the shows that I do, but I do want you guys to know that we live off of the loans that we do. And so definitely if you've thought about doing anything mortgage, a new purchase, or any kind of a refinance, home equity line, a reverse mortgage, whatever it is that you are looking for that is residential financing, that is what we do here, and that is what we need you guys for. I love to give you the information. I love to be an educator. I love to bring you guys my show every week, but I love it even more when you guys call us and give us the opportunity to help you with your financing. So how do you get a hold of us? You give us a call. It's 844 935 3634, or you can call the direct number to our office is 661 349 8300. You can go to my website, go to mortgagemomradio.com. There is a contact us button that will send me an email, and I will absolutely respond to your questions. So however you feel the most comfortable to get in touch with us, fabulous, do it. Call us, text us. You can text the 844 number, so 844-935 3634. You can send a text message to that number. But we want to help you, and very, very many of you guys could really, really use that relief right now. So definitely reach out and let us help you. If we can't do it, we're going to tell you that it doesn't make sense. You got to wait a little bit longer. But if there is an opportunity to help you with your cash flow, whether we need to look at paying off some debt, consolidating a first and second, or doing some sort of a streamline or rate and term refinance, we're going to absolutely go through all of those different options with you. So with that, it was a really quick show. Very, very exciting news. 0.5 point. We've already seen great rate reductions. Our interest rates are really in a good place. Let me just kind of throw a couple out there for you. A streamline refinance, FHA or VA right now, some of them depending on your credit score, your property type, right? Lot goes into it. We've talked about how we determine interest rates, but some of our clients are taking advantage of interest rates as low as 5%. That is 5.0. The majority of those streamlines today are right around 5.25, so 5.25. So if you have an interest rate that is 5.75 or higher, you should absolutely be giving us a call. Heather's on my team, and she's got a client in right now that is going to be saving $770 a month just by doing a streamline refinance for her particular situation. Many of you have interest rates in the high 6s. Many of you have interest rates in the 7s. That is what has taken place. That is what has happened to us over the last couple of years. And this is a fabulous opportunity for you guys to be able to get that cash flow lower, that monthly payment lower, and to do it really simple. Streamlines are very simple loans. Refinances, we can look at those as well. Like I said, if you've got some debt, you've already got a second, you've already remaxed those credit cards back out again, definitely reach out. Let us help you. So one more time, the phone number and the website, and we'll call it a day. So it's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Direct number 661-349-8300. Go to the website, go to mortgagemomradio.com. You can send us an email right through the contact us link. And once again, where can we help you guys? So let's do it. California, Arizona, Nevada, Washington, Idaho, Texas, Tennessee, Georgia, Florida, Illinois, North Carolina, and Oregon. I hope you guys have a fabulous rest of your day. I don't see any questions that came in, so I'll be back again next Wednesday, but obviously we work round the clock. So if you guys have some questions, reach out to us here at the office. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 20802379926, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.